Welcome guys to part 2 of structure of the new YouTube series. So I promise you guys, we're gonna talk about external and internal structure. And this is really important. Not that important for swing traders, but for scalpers, and all of my students are scalpers. This is really important. If you don't know the difference between external and internal structure, you're gonna lose. So let's dive into it. As you can see on my screen, we have two things: external, internal. What does it mean? I wrote it down for you guys. This is higher time frame structure. So for example, this is the 1 hour, right? 1 hour is bearish. As you can see, like last video, we are creating lows, and the highs that break the lows stay strong, and the lows get taken out. So the weak links, the weak lows get taken out. Break of structure, break of structure, break of structure. Low gets taken out once again. Low gets taken out once again. Break of structure, strong high. So we are in a bearish trend on the 1 hour. But don't get confused, because if we go over to the internal, as you can see, I marked this out. This is, let's say, this pullback, for example. Right here for the 1 minute and 5 minute traders, this pullback on the 1 hour just looks like bullish momentum. So why is this so important? In last video, I explained you guys that never trade against the trend, because then you'll lose. You're trading against the big boys and you don't want that. Right here, let's say you start up your PC, you start up TradingView, you open up your C Trader, you get your magic keys ready, right? Like every student of mine, and you sit down and you look at the market and you go to the 1 hour and you're like, okay, 1 hour is going bearish. I see the break of structures, I see the strong highs, I see the weak lows, blah 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 blah. And then you go to the 15 minutes, you mark out your liquidity, your zones, whatever, and then you're going to the 1 minute, and all of a sudden all your bearish momentum is bullish and you're getting confused. So why is that? Because right here, this is such a little move on the 1 hour, right? It's just a tiny pullback. And don't worry, we're gonna go to the charts as well, but I'm just explaining like this. This is such a small pullback on the 1 hour. But don't forget, this might be 4 candles on the 1 hour, right? But that's 4 times 16. That's 240 candles on the 1 minute. On the 1 minute, it looks like this. We're breaking highs, we're breaking highs, we're breaking highs. And maybe you're like, okay, well, I'm gonna get in maybe here, here, or here. But what happens when you get in and you buy against higher time frame trend? What happens is you're gonna get taken out. Or for us students, it's be break even. But for people that are not VIP students or don't use break even, you're gonna lose. Why? Because we're going against a trend. So how do you identify internal structure? How do you identify external structure? How do you know which is which? We're going to explain it in this video today. So if we go to the US30 right now, well, let's not go to US30. Let's go to the GPD USD. And we go to the 1 hour. On the 1 hour, or even 50 minutes for my scalpers, on the 50 minutes, we are really bullish, right? We're breaking highs, highs, highs. Right now we're breaking highs. So if you go to the 15 minutes and you're like, okay, we're going bullish. I see some liquidity, for example, right here. My fairway gap, my blah, 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 blah. You go to the 1 minute and all of the sudden, maybe you're around here or here. You're like, oh, but this got taken out. That means we're going to go bearish now. So the whole market is going to shift. So if you mark out this, for example, and especially newer traders won't enter off of this, right? But mostly here, because beginners' mistakes, you're like, oh, okay. We just took out this low. Now we're gonna go up and we're gonna test our whatever order block, whatever you guys trade. It's gonna test and then we fall, right? That's what most of you guys do. Don't have to lie to yourself. Don't have to lie to me. I just know how it works. This is the average scandal of a newer trader. Why? Because I don't know external structure, the difference. On the 50-minute, it was bullish. Once you go to the 1 minute, it becomes bearish to some people. because they're marking out the wrong lows and the wrong highs. So how do you prevent those things of happening? Because we don't want this to happen. If you go to the 50 minutes, once again, we delete this. And you see this for beginner traders. For experienced and VIP traders, we do it a little bit different. But for the beginners, for the YouTube, I'm explaining to you guys like this. So let's say you mark out your highs and your lows, because we just started with market structure. So you have to mark out your highs and your lows. What you want to do for you guys, which is really smart to do, is just mark out your highs and your lows with a single line. Just mark out your highs and lows, right? So now every high and low is marked. You can delete that. You go back to the 1 minute where you want to take your entries. Now you can see which is the strong structure. This also works on the 1 hour, 4 hour, depends, but we use 15 minutes, 1 minute, and 15 seconds. But for the guys that like to trade with 1 hour, 15 minutes, 5 minutes, works exactly the same. Because everything I'm teaching you guys works on crypto indices, Corona graphics, blah, 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 blah. It works on 1 hour, 1 year, doesn't really matter. So now you made a base for yourself. Now, as long as we keep breaking these highs, we're going to go bullish, which means when we break the high, we want to look, let's say this high gets taken out, right? This gets taken out by this high. You want to look around this area for market to come back in to potentially take an entry, right? Same here. Take out this high. Once the market around this, or like even here, to take an entry. So it's really easy to prevent because you're marking out your higher time frame highs and lows. Because once again, if you're like, oh, but we took out this low, I want to sell here, you're going to lose. Why are you going to lose? Because your main structure low has not been taken out, which means market is still going to go bullish. There is no bearish indication whatsoever. Because if we go back to the basics, how to identify a bearish trend, it's by finding break of structures, right? Lows get taken out and the highs stay strong. If we go to the 15 minutes once again, as you can see, we do not take out a single low. All we're doing is taking out highs, building up liquidity. Now you cannot buy in this area. So what do? Here comes a trick with internal range liquidity structure. And I'm not gonna give you guys too much information. My VIP students will, but for you guys, for the YouTube video traders, I'm not giving out everything, but I'll do my best. For you guys, we are going bullish, but you don't have a clear way to buy, right? Because we're not breaking here, so your zones are, you're not gonna look here if you don't know the secret. The secret is because we are gonna go bearish or bullish, excuse me. We are gonna go bullish in the long run, so it can take up a few hours until we're breaking this high. Even though this low did not cause this high to break, it eventually will. So what you can do is mark out this as your zone already. And even though market did not take out this high yet, what you see market is doing is it is building liquidity already. Right here, right here, right here. What happens here? We have liquidity here. I'm gonna mark it out. Here's a lot of liquidity. Here's a lot of liquidity. Here's a lot of liquidity. Here and here. So now you see that we're coming back near our zone. Let me mark it out perfectly. Yeah, so like this. What happens here? Market has one tiny push up, one more little bit of liquidity, and we create this. Now people, especially here, people are gonna assume, oh, we're gonna go bearish. I'm a sell. We just took out buy side liquidity. We have a fair value gap here. We're breaking lows. We took out this low. This is just a fake out. We're gonna go bearish now, right? And this is where you guys go wrong. If you go back to the 15 minutes, you see that we are very much bullish. So you go back to the 1 minute, you wait for the market to come back in your zone. For our VIP members, you know what to look for around this area. But for you guys, when it comes back in your zone and your fair value gap, you can very much easy take an entry, right? And what do you target? You target this high, because this high is gonna get taken out eventually, because higher time frame is bullish, right? As you can see, we are just breaking highs and not breaking lows. And that's a little bit of a kind of secret. It's a short video. It's really just to show you guys that higher time frame is the key to trading. We don't want to trade against a trend, obviously. Let's take this part for example. Higher time frame is bearish here, right? You guys can all agree. So what do? Mark out this, mark out this, mark out this. As long as we keep breaking the lows, you have confirmation that we're gonna go bearish. So even though we are taking out these silly highs here, it does not mean we're gonna go bullish. So we took out this high, we're taking up this liquidity, we're here in the fair value gap, blah, 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 blah. What most of you guys, YouTube traders do, unexperienced guru watchers, what you guys do, you're like, oh, okay, we got it. We have a break of structure. We're gonna go bullish from now. We build up liquidity here. I'm definitely gonna buy. You place your order, and what happens? You get taken out and you become liquidity for my VIP students. And that's the problem with you guys, since you're not following higher time frame. My VIP students would have sold here, 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 once again. Higher time frame, either a higher time frame like 4 hour, 1 hour is bearish. What happens here? Oh, we're taking out highs. We're gonna go back in my area and I'm gonna place a trade. Yep, definitely gonna take out this high. I'm gonna place a big trade and you maybe make 2% and then you go break even or stop loss because you're not taking the external range and internal range in consideration. Did I just delete it? I deleted it. Okay, that's fine. You guys can go back and make a screenshot. So keep in mind when higher time frame is bearish, even though lower time frame looks like we're gonna go bullish, we will fall because, and for the VIP student watching, this is already really clear for you guys because I explained already this higher time frame. This is what happens on lower time frame. We go up, we go up, we go up. You're like, okay, we're breaking highs. I'm waiting here for this zone and I'm gonna get a big trade because I need to pass my funded account. I'm gonna risk 4% and then boom, funded account gone because you're not following higher time frame structure. So guys, please write it down in your notes. Go on the charts, draw it out, train your brain to look at higher time frame. Mark out your 15-minute highs and lows or whatever you want, and just make sure you don't fail and trade against the trend because then you're gonna lose. So guys, thank you for watching and I'll see you guys in the next video.